All right, guys, so we turn our attention to what we call the correction of errors and suspense accounts. It's a very tricky area, but very simple. All right. So it is a build up on your ledger study and your daybook study. So it's just the basic accounting. If you have that one right, you can get this one also right. All right. So we are looking at errors. Now, we all know that errors are mistakes, all right? So it's simply mistakes that are made inside the account. So that is that. But the fact that mistakes are made doesn't mean we don't have to correct it. We still have to correct it. So in terms of trying to correct it, we need to understand that there are two types of errors. All right, we have the errors that will happen, but still your trial balance will balance. Okay, so we have errors where the trial balance will balance. Then we have errors where the trial balance will not balance. So in your study in accounting, I mean the basic, the accounting process, I wish you go back and watch those videos. Because in the accounting process, we learned that you must have a source document and you record what? Your books of prime entry. From the books of prime entry, you do your ledgers. From the ledgers, I mean, the control accounts are all part of the ledgers. Then you go and do your trial balance, for which your trial balance should balance. If your trial balance doesn't balance, then it means it is probably due to errors. All right, now, this is it. What happens, therefore, is that the errors that does not make the trial balance balance, we will introduce in what we call a suspense account. So a suspense account. So these are errors that will happen that your trial balance will not balance, and there is an introduction of what we call a suspense account. Now, the errors that will happen and your trial balance will still balance include these types of errors. So as you see there, we have error of omission. And what is error of omission? Error of omission is when you didn't record a thing at all. It was omitted from the financial account. You know the accounting principle. To every debit entry, there is a corresponding credit entry. So if it is not recorded at all, it means in the trial balance, the debit side is not done. Neither is the credit side also done. So that means that your trial balance will still balance. All right. So if 5,000 was omitted at the debit side and 5,000 was omitted at the credit side, it's the same thing. It will not, but it will still not affect the balancing. All right. So that is that. Then we have, so what do you do in terms of correcting it? You record it. Since it wasn't recorded, you record it. So for example, we have cash sales of 100,000 not recorded. You have to record it. But here, I will show you the trick here because you need to be very careful. You need to remember your double entry. And this is coming from your daybooks and your ledger knowledge. All right. Then we have another one called error of omission. Error of commission. Now, what is error of commission? Error of commission, it is not like we forgot to record. We recorded it. It's just that we recorded it in a wrong personal account or wrong account. So that is that. The correction is done. The recording is done. But instead of correcting account A, we recording it in account A, we recorded it in account B. But the double entry is correct. The double entry is correct. But we have recorded it in a wrong title of account. So for example, we have expenses of 500 cedis, rate expenses of 500 cedis, which has been debited to what? Rent. The double entry in terms of debiting and credit is correct because you have to debit it. But instead of debiting, what do we call it? Rate. What we actually debited was what? Rent. So what do you have to do? You have to move it out of the rent and come and put it back in the rate. That's all. So commission is when you record the double entry correctly, but in a wrong account. All right, so that is that. You record it in a wrong account. All right. So then we have error of principal. Error of principal is a transaction that has conceptually been recorded incorrectly. Now, why? Because this one affects the principal. You know the double entry principle? Yes. So double entry principle says that, we should debit assets and expenses and credit incomes and capital and liabilities. So if you go and credit assets instead of crediting a liability, then it means you've missed the principle. All right. So basically that is that. So a typical example is that a non-current asset that has been purchased for 1,000. So you have to debit the non-current asset, but look at what they debited: repairs and expenses rather than the asset. So it means that what you are doing is that you are not doing the correct accounting. So if you are supposed to debit asset, don't go and do it in anywhere. All right. So basically that is that. So you are missing the double entry principle. So you bought asset. Instead of debiting the asset, go and debit something else. All right. So that is that. And sometimes too, most importantly, sometimes what you realize is that the double entry principle is flaunted on. So instead of, let's say, debit what comes in and credit what goes out, you are rather debiting what goes out and crediting what comes in. So that is that. Then we have compensation error. You see, we have two different errors that have been made, which cancels out each other. All right, there is an error, but the error compensates themselves. All right, a typical example, look at this. A rent bill of 1,002 has been debited to rent account, all right, as 1,004. And a casting error on sales has also resulted in sales being overstated by 200. So what do you see? You see that an error is done at one place and another place. But in the sum, the trial balance will still balance because the debit side has been overstated by 200 and the credit side has also been overstated by 200. You see that the debit side, which is this expense, must be 1,002, but they recorded 1,004. So the debit side will be over. All right. But again, sales too has been overstated by 200. So the credit side is also going to go up by 200. So they compensate themselves, still making the trial balance what? Balance. All right. So that is that. Then we have error of original entry. So as you can see, this one has similarities with the principle. You see, the principle here is about assets, liabilities, income, and expenditure. All right. But you see, the error of original entry, by original entry, we know that we have how many original entries? Remember, books of prime entry. We have the sales journal, purchases journal, return inwards journal, return outwards journal, cash book journal, general journal. So now here the double entry has been done, but with the wrong amount. So that is basically what is happening. So instead of putting the thing in a good journal, sales journal, so that it translates into your sales ledger, what you are doing is that you are putting in wrong amount. So what happens? For example, cash sales of 76 has been recorded as what? 67. So you see that there is an overcast or undercast, so something like that. All right. So as you see. Anyway, you later on come to a realization that these things, as it stands, you see, it is a cash sale. So your cash, which is your debit, is 67. Your sales, which is a credit, is also 67. Everything is balancing, but it is actually wrong. You didn't record the correct amount. Then we have reversal. So this one too, the correct amount has been posted, all right, but on the wrong side of the account. So instead of debit, you did credit. Instead of the credit, you did debit. A similarity with this kind of. You see, in this principle, what you see is that you are the concept under it. You see, this is the concept. You remember A is equal to C plus L, and we have E and what? I. All right. So E is expenses. All these two are debit. So instead of debiting this and you debit this one, that is what we call principal. So instead of crediting something here, you go and credit. You see, this is the T account. So everything here is a debit. Everything here is a credit. But what if you are supposed to do something here, then you go and put it somewhere here? You have violated the principle. That is that. So error of complete reversal to, instead of debiting this, you come and put the debit here and put the credit here. It's a complete reversal. All right. And these reversals, when you are doing it, sometimes you have to double the figures. All right. So that is it. Then we have error of duplication, which means the transaction has been recorded twice. Now, you don't really need to memorize these definitions, all right? You don't need to really memorize it. What you need to know how to do is the approach of either way correcting the error. So wherever it is, where if the error is coming from this side or the error is coming from this side, you need to correct it. All right. And in correcting, we will use the general journal. Do you remember some of the uses of the general journal? For adjustment, for what? Correction of errors. You remember? All right. So that is that. Now, what is your approach in dealing with how to solve these kind of questions? Well, if you want to solve a problem which the trial balance still balances, then what you need to do is that, what is the double entry? That is the first thing. Whatever error that was committed, what was the double entry? If it is omission, commission, whatever thing, what was the double entry? The double entry they did, the wrong thing that they did. What was it? Then what should have been done? You know what should have been done, what they did. So repeat their wrong. This is your steps. Repeat their wrong. So repeat it somewhere. Then what do? Know your double entry. So know your double entry. Then correct it. That's all. Correct it. Now, my love for the accounting equation is equal to A is equal to capital liability. E versus I. So E versus I, E is expenses and I is what? Income. All right. So you see, like I did before, this is the T account. Ladies and gentlemen, everything, know the examples of things here. Everything here is a debit. Everything here is a credit. So that is it. You have to know this to be able to correct the issues. All right. So basically that is that. So let's pick, for example, this one. A car sales was not recorded. If it is not recorded, then you have to record. How do you record a car sales? From your cash journal and the ledger that we did. Cash sales, we all know. So you ask yourself, where does this thing fall? Sales is income. Is that not it? Cash is part of your asset, your current asset. Is that not it? So know all those things, and it comes from your basic accounting. So if you know this, then it means that I need to debit cash of how much? 100. All right. Then I need to credit what? Sales also of what? 100. So this is what you do, and this thing you have done is the journal. So you write being omission of cash sales now corrected. That's all. So your general journal will look like this. And we learned this thing in the basic accounting. I think that will be the 4th video or so. So you have your particulars or details. Then you have your debit here. You have your credit. All right, so something like this, you can pick everything here. Then you don't write the debit because the debit is here. So what are you debiting? So all that you do is you write cash, then you write sales. It's an art. Have you seen the way I wrote it? It's slanting like this. Yeah. So here will be 100. Of course, you have to put your currency. And here also, oh, sorry. This side will also be 100. Then you write being omission of cash sales now corrected or now recorded. So that is that. You are done. Easy peasy. So that is that. You see, the double entry is what is the focus. So here there's nothing like suspense. So let's pick this one. Rent expense of 500 paid in cash has been debited to rent account in error. So rent expense, as you see, paid in cash has been debited to rent account in error. You see, a rent account can become a rent. It must have it can be an income account, or it can be what, an expense account. But the thing is, rate expense. Sorry, that's it. Rate expense. So instead of doing it inside the rate, we did it inside the rent. So, like I said, you can repeat their mistake. How do you repeat their mistake? So this is what they did. So let's say you have rate, you have rent. So what have they done? Rent expense paid in cash has been debited to the rent account. So this one has been debited. How much? 500. But it shouldn't be like this, which means that the cash side is correct. The credit has been done. But this is the problem. So how do we correct this? We need to remove it from this one. And how do you remove it? Should we cancel? No. We have to come to the opposite side and do 500 with rates and come to the debit side. All right. Rate. So here we are correcting it. So you can write the cash that should have been there, 500. So this is it. So how do we correct this? We come into our journal. We will say rate 500, rent 500. That is what we did. So you write being, so this one is the one that we learned here that you put in the wrong commission. But you don't write error of commission now corrected. You can't remember those things. So you say being rate expense recorded in rent account now what corrected. So basically, that is that. You go your way. So you go ahead and do for all these things. Non-current asset purchase for 1,000, that has been debited to, I think you saw that in the examples. All that I've used here is what is here. So what do? Non-current asset was purchased, all right, on credit, has been debited to repairs and expense. It shouldn't be debited to repairs and expense. You and I know that. So what do? The thing has to be debited to the non-current account. So it has to go to the non-current account. Another name for non-current account is what? The non-current asset is what? Fixed asset. Then what are we? We are going to remove it from this debit inside, where is it? This debit that happened inside the repairs account. So we need to take it off. All right. So how much was that? 1,000? 1,000. What narration will write? Being purchase of non-current asset debited to repairs expense. Now corrected. That's all. A rent bill, 1,002. Paid in cash was debited to the rent account correctly, but here they did 1,004. But how much should they have recorded? 1,002. All right. So here, so we have our rent. So repeat their mistake. The rent, they debited 1,004, which should be 1,002. So all we need to do is to take 200. That's all. So you are going to credit this account with 200. But normally, we should have a corresponding entry, which would have been the suspense. That, but the statement didn't finish. It says that the sales and a casting error on sales account has resulted in sales being overstated. So, question: double entry of sales. Double entry sales, is it a debit balance or a credit balance? For what I did for you, do you remember? Where do you think sales will fall under? is a credit balance. So they are just trying to tell you that the sales too was overstated by 200. So whatever figure that was here, they overstated it by 200. So which means that 200 must go away. So since we credited this account, we have another debit to do here, so that this one will cancel this one and this one will reduce this one to 1,002. So that is it. All right. So all that we are doing, and anytime you hear something has been overstated, it means go to the opposite side and reduce it. It's as simple as that. So we are debiting our sales and we are crediting what? Rent. All right. So 200, 200. That's all. That's all. So you can use being overstatement of sales, all right, and a wrong debit of rent account or overstatement of rent balance of 200 now corrected. So overstatement of 200 in rent and in sales now corrected. You can put it there. That's all. Then here too we have a cash sales, so you can write your narration. Here too we have a cash sale of 76 that has been recorded as 67. Now look at this. What is a cash sales? How do you record a cash sales? We went through it. Cash is at the asset side, then sales is at the credit side. So we have, let's say, your cash, you have your sales. Now they recorded how much? The cash sales, they recorded 67, and here to 67. So we need to find the difference. So what is the difference between 67 and 76? So find it. It is 9. All right. So it means that we need to increase both sides. All right. So you go here, debit cash 9, credit sales 9. So that is what you would do. All right. So what did we do? We debited cash and we credited sales. So with 9 and 9. All right. So basically that is that. All right. So being understatement of cash sales now recorded or now corrected. Then the last one. The last one says that a cash sale of 200 has been debited to cash sales and credited to cash. A cash sales. You see what they did there is that they did it the opposite way, so complete reversal. All right. So what they did is that we know cash is supposed to be debited, sales is supposed to be credited, but that is not what they did. That is not what they did. So we have cash, we have sales. So what they did was that the cash sale has been debited to sales. So they did 200 here, then they did 200 here. But cash sales is not like that. So how do we correct it? You see that to be able to have the 200 here must be 400. Is that not it? To be able to have the correct 200 here must be 400, so that when it cancel out, the balance will stay. So what did we do? You realize that we debited our cash with 400, all right, and credited sales also with what? 400. So being wrong, reversal of entries now corrected, or sales, cash sales that has been wrongly debited and credited, you now did the correction. So basically that is that. All right. Then we have the errors that does not make the trial balance. So those ones too, you will see that the double entry, only one is showing. You have to do the other part, and that one will be the introduction of the suspense account. So here, it's a single-sided entry. The debit side has been done, but no corresponding entry has been done, or vice versa. So when you correct one side, the other side will be the suspense. All right. So and here we have, you say the debit and the credit have been made, but different values. All right. So the same thing, you correct it, you put in the suspense. Two entries have been made on the same date. They've double stuff. Kind of. All right. This is not majorly like the duplication. So we will pick up some examples and you will see the balances, opening balances have not been brought in. You will do that. Then the casting errors, you will do that. So here you do the first part, then the corresponding entry will be in the suspense account. All right. So basically that is that. When we pick the main questions, you see how it happened. So what you see is that it's a single-sided entry. when you do, accounting is supposed to be 2 legs. So you realize that when you do the first side, there is no second side to put anywhere. That second side now therefore becomes the suspense account. All right, and you prepare a suspense account when you finish with everything. And so you just have to look at the template. The difference in the trial balance is to be given to you. You cannot have a balance here and a balance here at the same time. It should be one. So 2 balance cannot happen at the same time. All right, so that is that. Then you bring in any discounts and these purchases and creditors. We will pick up a full example and we will look at that. And if you are asked to do an adjustment on the net profit, you will pick the net profit per draft account. Then you add understated revenue. Why are you adding understated revenue? You are adding understated revenue because the net profit, if it is a net profit, it is a credit. Profit is a credit. It's an income. All right. So that is that. Profit is a credit. Then loss is a debit. That is that. So if revenue was understated, you need to top it up, which means you are crediting it again. All right. If your gains were understated, all these things are revenue. So as you can see, these things are revenue. But if your cost is overstated, you need to reduce it. How do you reduce it? Because see, when your cost is overstated, your expenses are overstated. What happens? Your net profit come down. Have you seen that? Yes. If they are overstated. So if you are correcting it, it means you need to add the money to your net profit. Because watch this. If I have sales 10,000, then I was supposed to debit cost of sales. I was supposed to deduct, let's say, 5,000. What would my profit be? Is it not 5,000? But let's say I mistakenly deducted 7,000, overstatement of the cost or the expense. What do you think will happen? It means here will be 3,000. So if I'm correcting the thing to make it look like my 5,000, I'll have to add. So that is why for expenses, we add. The reverse is the same. You will less revenue overstated. All right. Why? Because an overstated revenue increased your profit. So to bring it back, you need to reduce your profit. You need to less it. The same thing, income overstated. Then expense what? Rather what? Understated. So the same analogy. All right. So in summary, what have we done? We've learned errors. We said that there are some errors that makes the trial balance still balance, and we have some that does not make the trial balance balance. All right. So we have these types of errors. Then the single entry sided error, which involves the use of the suspense account. So you correct the errors in your general journal, all right? And some of the errors have impact on your financial statement or your net profit. So all the errors that have impact on net profit are those ones that are P&L items. Please, balance sheet items such as cash. So all these ones, asset is equal to C plus L. Those ones that are here, we don't use it to adjust the net profit. So the ones that affect income and the one that affect expenses is what we use to adjust the net profit. Because we use this side to prepare your SPL, we use this side to prepare your statement of financial position. So please don't ever bring anything that is in the statement of financial position to affect your net profits. Thank you. We will look at the tutorial set questions in the next video. Have a great day.